Good afternoon, everybody. I would ask if you guys missed me, but I know there's no way that you missed me when you had Patrick to give the afternoon meetings the last couple of days. No way. But it's good to be back all the same. Good to see you guys. Oh, thanks, Josh. Where's that like meme picture of me and Josh with the chef hat and the pizza? It's a pizza, right? Oh yeah, that was a really good one. All right, let's jump in. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer. There it is. Which is an SEC registered broker-dealer and member of Precipice. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here's the position disclosure. There are definitely some updates in here since I last did an afternoon meeting Thursday last week. I don't exactly remember what's different, but I know that there's stuff that's different. So, if you're curious to know whether or not I'm talking my own book, make sure to fully see the disclosure. All right, let's jump in. All right, so wow, what a wild day today. I thought it was a really good trading session. I know there was a lot of chop and range bound action, but it was a ton of volatility with it. So I kind of thought it was great. Hope you guys did too. The SPYs finished down over a percentage point. The Qs finished down about a percentage point. And the IWM down 2.8%, so definitely taking the brunt of it, with the TLT being down over 2%. TLT working towards $90 and definitively losing that $92 battleground inflection point that had been so important to this thing. So there we go. Fed Chairman Jerome Powell was allegedly part of a sting operation by an investigative group. The hidden footage is expected to be released in an hour. All right, we'll see what that turns into. Yeah, so obviously a pretty big down day for the market. The inflation number came in hot pretty much across the board by 0.1%. Year-over-year numbers, month-over-month numbers, core numbers, pretty much everything came in hot by 0.1%. So that is definitively not good for the equity market. But the concern is, can the Fed even consider hiking at all, considering that, cutting at all, considering that inflation is staying relatively hot. Now, there's a couple little potential silver lining pieces of information that we were kind of identifying this morning. It's really hard to just figure out this market in some regards because of how insanely strong we have been this entire calendar year in the face of consistently increasing expectations of higher interest rates or less cuts. So I noted in the morning meeting again today that at the beginning of 2024, just a few months ago, we were pricing in 7 cuts. Coming into the CPI today, we were only pricing in 2 cuts. When really the Fed has kind of been saying that they're going to be doing 3 cuts. So, does the number that came out today actually change anything? So sure, it's starting to certainly seem like inflation's a little bit stickier than the Fed would like to see. That maybe those last 2 CPIs before today were more than little upside blips in the radar. I feel like the Fed really needed like an inline or a light number today, and they didn't get it. They got a hot number. But at the same time, a couple things to note. One is that at this point coming into today, the market was trading at a place where it was already pricing in just 2 cuts. So what does the market think at this point after this slightly hot number? We're getting no cuts now? It seems like everything that the Fed and the different members have been saying, and we saw this kind of reiterated a little bit with this FOMC, but the FOMC minutes that came out today are obviously backward looking. They were not counting in today's CPI. All indications still point that we're going to be getting cuts this year, at least based on what the Fed is saying. I don't know what the updates are on what the Fed funds futures are actually pricing in at this point. I would assume that they're still pricing in 2, but maybe it's less than that. Maybe someone can tell me if they have that information. But yeah, so it's like if the market was able to hold in that well, thanks, Bill. If the market was able to hold in that well over the course of this calendar year, when we've reduced expectations by 5 cuts, does today all of a sudden actually make a difference? That's kind of the first question I'm asking myself. The other thing that we said in the morning meeting, though, is that it's really interesting how markets work sometimes. I've just seen this happen many times over the course of my career. COVID was one of those things where something exists, it's obvious, it's right in your face, it's looming, and the market just ignores it and ignores it and ignores it and ignores it, and it seems like all of a sudden one day it just decides that it cares. And I remember it really was that way with COVID. I mean, we knew about COVID in the end of December, beginning of January, and then it started to show up in the United States. And then I remember that rally that we continued to have at the end of January and beginning of February. There's one quick downtick, and then we got new all-time highs, and it almost seemed like that was going to be it. And then all of a sudden, the market around mid-February, coincidentally coinciding or not coincidentally coinciding with February OPEX, the market decided it cared. So, what makes the market decide to wake up one day and care? Well, sometimes it's just that final straw that breaks the camel's back, which maybe that was this today. Or sometimes it is more related just to market dynamics. Again, the example of COVID, we know about it. Market is super resilient, continues to move higher, and then all of a sudden we get through OPEX, and the market loosens in such a way, that window of weakness, if you will, where the market was able to really crash. So here we are all of a sudden with the market technicals looking not as good coming into today's trading session, starting with that day to take notice of last Thursday on the 4th, that big negative Maribozu that we never fully negated. The argument you could make that this is a lower high from the last couple trading sessions, and then does today lead to a lower low? At the same time, we begin to lose some first level support with really the Fed starting point numbers that we keep talking about, which was like SPY 515.50. I forget exactly what the Q number was. In the IWM, it was 202.06. So we start to lose those numbers as the technical picture begins to change. And then on top of that, we're in a little period here of seasonal weakness that typically takes place between about April 10th and about April 15th, where people just need to raise money to pay the IRS. I know I personally wrote a pretty big check to the IRS today. Are we finally hitting that point where we can actually break lower or not? Or is it the exact same thing that actually happens that we have seen so consistently, where we've managed to downtick for a couple CPI prints in a row, and then within 2 trading sessions later, we have fully retraced and we're all the way back up? That's really kind of the question that you're asking yourself on today's trading session. Is today the straw that breaks the camel's back? We've really been in this environment, and I really believe it's still this way, where small dips are structurally being bought, but a big dip at a certain point can lead to significantly more selling. So, we identified that 515.50 area for the SPYs as a big support zone. The next one we mentioned is 508 to 510. The next one is 503 to 505, I think. Those are the major support levels on the downside to actually have to pay attention to. So, so far, when you look at the technicals at the end of today, it's kind of interesting because we just chopped around and digested with a ton of volatility, where I don't think that the bulls proved themselves that they were able to recover enough today. Maybe they do it tomorrow. Again, the last couple CPI prints, we had 1 week day, and then the very next day we were back up. But I also don't think that the bears have fully won this picture yet to break us down. Let me just see Bill's chart here. Implied rate. So I see on cuts. So that we're still kind of factoring in Bill, interpret this for me. I feel like I'm looking at still a decent chance of 2 cuts this year, like maybe a 50% chance of 2 cuts this year if I'm really able to read this properly. Anyway, the market technicals here. What I was saying intraday for bulls to really kind of recapture the day would be a close above 515.50, and we didn't get that. We closed at like 514, a little bit above 514. We traded above 515 today, but we did not close above 515. Yet we didn't close weak. We didn't downtrend throughout the day. There wasn't like heavy bear flow coming into the options market that would also indicate that we are kind of getting over the precipice of that area where a feedback cycle of selling leads to more selling. So I would say at the end of today's trading session, it's kind of like we're fairly neutral here. The bears haven't really fully gained control, but the bulls haven't fully taken back control after that print today on CPI. And the other thing I wanted to note about that CPI print again, which is what Dimitri said in the beginning of the day, a lot of the hotness of the print, like 50% of the month-over-month increase or something like that, is specifically related to shelter and gasoline. So I actually thought that was like a feather in the cap of bulls a little bit today. But what matters more than anything, so I thought that the bull side of the argument, I guess just to sum things up and kind of repeat what I was saying earlier, the bull side of the argument is that we've already been able to price into the market going from 7 cuts to 2 cuts and still have the market trading where it is. And also, yeah, the number came in a little bit hot today, but if it's specific to gas and shelter, maybe that's not the end of the world. And it gives bulls a chance to kind of rally this market back up. So that's kind of the bull case. The bear case, again, is what I was talking about, more of like the straw that breaks the camel's back, where eventually this is finally an event where we break lower, break support levels, and more selling actually comes into the market. And then we want our technicals to come and confirm whether the bull case or the bear case is the one that's actually winning. I don't think we have any technical confirmation at this point with how we traded and how we closed today on who actually is winning this battle. So we kind of have to wait and see. In some ways, it almost seems like time is always a bull's friend right now, where if they can't really break us down and push us lower and rip this VIX higher, that eventually the bullish dynamic kind of just takes hold. The VIX here, did we close below 16? Yeah, we closed below 16 in the VIX. So you definitely had a little bit of a VIX spike here, but I don't think that it was like a crash up in volatility. Obviously we didn't trade to $20 today. So I don't know. I think that we're in a little bit of wait and see mode right now into the next couple trading sessions based on where we closed. The bulls can't recapture the strength, but the bears haven't fully taken over yet. So we'll wait and see. That's mainly looking at the SPYs. Qs are giving us the same picture. It's kind of insane how big that volume bar is on the Qs and how much intraday volatility we had in the Qs, given that the intraday range is so tight. $1.63 worth of cuts. Okay. So at this point, we basically have fully priced in 2 cuts by end of January 2025. So yeah, so they lowered expectations a little bit, and you can probably even just see that even within the TLT trading lower here today and really losing that $92 support. That's why interest rates are actually moving higher. So we have a little bit of a tightening impulse today. Yet the market was actually able to hold in pretty well, though that tightening impulse most negatively impacted the IWM, which again, the Q is really tight inside day. The IWM is certainly worth looking at, because the Russell had actually been holding in with relative strength up until today. The Russell was the one index as of last Thursday when we had that day to take notice of that did not get below the Fed day starting point. It was still above, which was that 202. Today we lost that. 202 I think is pretty important for the IWM, but 200 is the massively important weekly level that we've been talking about for quite some time. And those were some pretty good opening longs this morning in the IWM in that 202 area. I know a whole bunch of us bought IWM or TNA really into $200. Sorry, I was just saying 202. I meant 200. 200 made for some really good trades today. Into 200 and below 200 on the first impulse sell move off that heavy extension when they sold the market off the initial print, and then it gave you several more opportunities to try it. So I did it pre-market, it made me some money. I did it when the market opened, it made me some money. I didn't go back after it in the afternoon though. Why didn't I go back after it in the afternoon? Because we know every time a support level gets tested that there's a higher probability of it actually breaking. I really liked the idea the first couple times when we had all that downside extension that was on our side to help us with a bounce. But then the afternoon tests of that $200 area, even though it roughly ended up holding and closing above 200, which is important, you didn't have the same extension on your side, and then you were also looking at just a multiple of tests by that point, which leads to a potential higher probability of a break. So, the IWM holding above 200 bucks, it's kind of the same deal here as I was just saying with the SPYs and the Qs. The bears have not fully regained control as far as I'm concerned, but the bulls haven't proven themselves yet either that they're just going to recapture highs in the same way that they have done so consistently throughout this calendar year. Show me the IWM getting back above 202 first, but really getting back above like 205, and then I think I'm looking at more of an all-clear sign for the Russell. We do want to pay attention to, and I didn't actually even mention this in the morning meeting today because there was so much stuff to talk about. We probably do want to note in our notebooks, in our trading notebooks that we all have, digital or otherwise, the starting point from today's CPI. Because in the same way that the upside move on the Fed day starting at 2 p.m. was important, the downside move negating that is going to be important for bulls going forward. So really you need to see SPYs get back above 520.30 to kind of give you an all-clear sign. You need Qs to get above 443 flat, and you need the IWM to get above basically 207. To kind of give you an all-clear sign that we fully negated this down move, which we are far away from doing. But if today happens to be a repeat of the last two CPIs, we'll be back there by tomorrow or the day after. I kind of feel like this one's going to be a little trickier to get back above, especially with the seasonal weakness that we're dealing with here over these 5 days. So, sorry, I think that pretty much covers it from a market perspective. Everything I did from a trading perspective today was kind of all based on the market and based on relative strength and relative weakness. I tried that Apple a couple times with Brandt. Ended up closing the position just because it closed so weak. I tried it once. I think it was on this bar and we got stopped out. And then tried it again off lows. So that one worked out pretty well. So appreciate that. Thanks, Brandt. Thanks for putting some money in my pocket. Again, TNA was trading, so that was market related. And then it was just about kind of managing my swings. I traded a boatload of TQQQ today. So yeah, good day. Lots of volatility. I'm happy to answer any questions anybody may have. So scrolling to the VTF, I'm not seeing here anything initially. Over in YouTube for now. If anybody's got anything who's in the VTF, obviously, post your questions. I'm happy to help. I don't know if Dennis is still here, but I know he was bringing up some stuff midday today that might have been good topics for the afternoon meeting. I was slightly distracted at that time, so I didn't fully read everything that he wrote. But if you're here, feel free to post that. That could be a good conversation. I'll pop over to YouTube, though, for the moment. From Gabriel, I know you're not fond of Bitcoin, but a nice pattern of higher lows is building on the daily and getting tight for a breakout. Strong day today despite of market, so relative strength. Sure, so let's take a look at Bitcoin, look at BITO. Yeah, BITO is a little bit of a flawed ETF. Somebody give me a symbol of one of the other new ones that was come. This BITO I know has a lot of decay because I think it's based off the futures product, and that's why it was able to be in existence before all the other Bitcoin ETFs. IBIT. I usually just type up BITO real quick just to get a quick look, but yeah, IBIT's probably the one to look at. ARCB. Just don't tell me the grayscale one. I'm not looking at that one. Yeah, so IBIT here looks like it's building out a a, a bullish wedge, like a bullish ascending wedge on the daily chart. So you've got the higher lows and kind of equal highs that are coming in. $41 is a potential breakout. I know that that halving event is coming. I'm not sure exactly when. I don't think anyone knows like exactly when, because it depends on how many coins are actually mined. But somewhere, I think in the next 5 or 10 days or so. So we'll see. I did read a thing, even though I'm not a huge crypto person, about, I guess this is going to be the fourth halving for Bitcoin, about the performance on the other three. And it sounds like Bitcoin traded really strong on 2 of the 3. And the third one, the most recent one, I think that they actually sold the event. So we'll see what happens with this halving today. This halving that's coming up in the next probably 5 to 10 days or so. But technically, this is a very bullish looking chart, so it should give continuation, and $41 is the spot to pay attention to. So thank you, Gabriel, for putting it on our radar. From Apex Joy, how will the market react if we get a hot PPI tomorrow like last month? We'll see. The PPI tends to not be as market moving as the CPI. The CPI is the big one, and then the PPI still has an effect, but it's a little bit more like the minor leagues as far as its effect on the market. So it'll be important. And again, just going back to that analogy of the straw that breaks the camel's back, if we get another hot PPI, maybe PPI typically is not as important as CPI, but it could just be one more negative event. So we'll see how that happens. I think that each negative event that we have that applies pressure on the market actually increases, Carol, I'm kind of reading your question as I'm saying this, increases the probability of that real breakdown. Because the more that I've been learning about the markets, especially the modern markets, probably the last 5 years or so, the more I'm realizing that it's about market structure as much as it is about anything else. Though sometimes you need some sort of catalyst or fundamental trigger to actually trigger that market structure. So every single time we have an event that's negative for the market that applies weight to the market that pushes us lower, there's a higher and higher probability that you eventually just kind of hit that point where we just hit that feedback cycle of selling, where more selling leads to more selling. The flip side that I was also just saying is I do think that time is consistently a bull's friend right now. So again, at the end of the day today, we don't have confirmation for bulls or bears really having control. That's probably more bullish than bearish in the scheme of things because the trend itself is still higher. And again, just those market dynamics, you really need to get this market down to a certain point where you can begin to actually trigger more systematic downside selling. So we will see if that happens. Breaking. Hidden camera captures Jerome Powell. Talking about Jerome Powell's legacy as somebody who held the line against Trump. The influential agency responsible for maintaining a stable monetary system appears to not be establishing interest rates, but to be setting policies for desired social outcomes. That's nothing, as far as I'm concerned. I feel like this is going to be much ado about nothing. They're just further trying to politicize the Federal Reserve, which is the biggest thing that Trump was trying to do during his presidency. Anyway, so hopefully, seemingly much ado about nothing with this hidden camera on Jerome Powell. Anyway, back to the questions. Let me fully read your question out loud here, Carol, just to make sure I covered it. If we get a slightly hot PPI, how do you estimate the probabilities of a market continuing down or sideways action? Yeah, so similar to what I was just saying with Joy, I think I covered it. Each push lower creates a higher probability of the market breaking to that area where selling leads to more selling, and a hot PPI could do it. But generally, PPI tends to have less of a market impact than CPI does. From Vikas, after PPI, is there anything else to watch before earnings from big tech? I don't think so. Someone correct me. I'm sure we'll have some, more minor economic numbers, but I think once we get through PPI, we really begin to go into earnings season in earnest, starting on Friday and into next week. What do we have from big cap tech next week? Do we have Netflix and Tesla? I'm not sure yet. It's a little too far out for me to have done that research. I think we might have Netflix and Tesla next week, but I'm not 100% sure. I think we have banks starting on Friday. So so then we go from the macro to the micro, where we start seeing if there's any further deterioration in these companies' earnings reports, or the opposite, right? So thanks, Vikas. Dennis, I was just talking about you. I don't know if you were here before. It's a speechwriter. It's not even Powell. I was talking about, I know you had some comments or questions on stuff that maybe you wanted to review in an afternoon meeting that you were talking about earlier, but I was a little bit distracted earlier. So if you want to repeat them, I'm happy to address, or otherwise, I'm not seeing any other questions coming into the VTF. Oh, I did have a question from Cameron that I missed. Sorry about that, Cameron. How much emphasis do you put on relative strength and relative weakness? A lot. If a stock is relatively strong intraday, will you avoid all short setups on that stock? No, not necessarily, but I recognize that if I'm shorting something that is relatively strong, that I have a lower probability of success. I think at one point today, when NVIDIA was ripping, I said something like, there's a shooting star right here. Right here. I called out a short off NVIDIA at 955 off the shooting star candle for a retracement basically to equilibrium, and it worked. But I said, as I called it out, I was like, yeah, shooting star here kind of indicating a retracement should come down in NVIDIA, so you can short NVIDIA versus highs if you want, but keep in mind it's the strongest stock in the market. So for me, that's kind of automatically like, maybe I'll take the short if the market's really confirming it, and even though the stock is relatively strong, if the market can weaken out enough, it won't matter if the stock is super relatively strong, I can still make money on it. But it's absolutely a layer of probability against the trade. So relative strength and relative weakness, I think, is really important. It's one of those important layers of probability that I like to pay attention to in any trade. I like to pay attention to relative strength and relative weakness on multiple time frames, which is one thing that we were talking about with Apple pre-market before the CPI hit. Pre-market before the CPI hit, Apple was trading really relatively strong. Had a good day yesterday. It was trading stronger than the Qs, nicely above 170 pre-market. And before CPI ruined it, I was thinking maybe Apple could actually be a long versus 170. But up until today, I've been saying on most days, maybe Apple can bounce, but we don't really want to be buying Apple. We want to be buying Amazon. We want to be buying Google. And for the most part, this month and last month, going after relative strength on the long side and to some degree relative weakness on the short side has paid really well. So I put a lot of emphasis on relative strength and relative weakness, and we want to pay attention to it on multiple time frames, because sometimes you can have a stock that's acting relatively strong today, but it's relatively weak overall on its daily chart. But it's not going to be as good as a stock that's acting relatively strong today and is also relatively strong on its daily chart. So yeah, definitely a really important factor. You also do want to recognize, though, that relative strength, relative weakness can be overwhelmed by the market itself. So going back to that NVIDIA idea, when I mentioned that call out, the other thing that you want to be checking at that time is, well, what do the Qs look like? What do the SPYs look like? And the one thing that I liked about potentially going after NVIDIA short there, even though it was the strongest name, is you got that shooting star that's coming in. It's indicating that you can get some retracement back to equilibrium, which is exactly what happened. But at the same time here, as you would expect, that the bears are going to try to take a stand to push this market lower, because that's when these Qs were ticking to that 80 MA on the 5-minute. For the first time. The SPYs were just about ticking to that 80 MA on the 5-minute for the first time. So we no longer had that opening extension that we were talking about pre-market, right? So what did we say pre-market this morning as our broad game plan? Let's be patient. Let's not push the shorts off the open. If anything, I like longs better than shorts off the open for the oversold bounce off the extension. But once we're no longer extended to the downside in a small time frame, that becomes the opportunity, if anyone out here is bearish, to actually push those shorts. So the NVIDIA call out is definitely the strongest name in the market, and that would be a thing that you don't like about it. But if this market was going to fully break new lows, I bet that NVIDIA trade would have paid really well despite its relative strength, which obviously is not what happened. We got that initial pullback here at 955. The bears tried to make a stand, but then the bulls just created another higher low and worked our way back up. And in turn, NVIDIA, which was extended, gave that shooting star. It pulled down to the equilibrium zone. It pulled down to the 80 MA. Never pushed further than that because it's relatively strong and because the Qs held in. And the next thing you know, NVIDIA was making new highs and holding in all day as well. So hope that helps, Cameron. Great question. I do appreciate it. You have a follow-up. With layers of probability, do you rank some factors higher than others? I do not. Or are you looking, it's probably more situational. Or are you more so looking for which side has more layers of probability? Yeah, so quantity versus quality, but also situationally dependent. Definitely also situationally dependent. So I would encourage you to review my probability class again, if you haven't already, where I go through everything in detail. It seems like you kind of have a good understanding, a good grasp, but I think it's one of the more important classes in my training program classes is the probability class that's in there. So yeah, I would say quantity versus quality, but I don't necessarily view them all equal. But what do I view stronger or as more important? I think is situationally dependent. So again, hope that helps, Cameron. From Dennis. I was talking about energy preservation throughout the trading day earlier. Trading can be super taxing, so we had a quick discussion about saving energy, especially midday, and disconnecting, doing something active, journaling some trades, save some energy for when it counts. It'd be interesting to hear how you generally build your habits off the screen and throughout the trading day to be able to perform at your best day in and day out. Cool, yeah. So it's one of those tricky things because I very much value not over trading. Let me start by saying that. Over trading can be a big problem for traders, especially over trading midday. We've gone through this in other afternoon meetings, but there's definitely a lot of statistics that show, and I'm talking internal statistics on our team, like our team's P&L, show that we make most of our money prior to 11 a.m. And it's been a long time since I've looked at the numbers, to be honest with you, but the last time I looked at the numbers, for whatever, I don't remember what the look back period was either, as a team, we had negative P&L between like 11 and 2. And the majority of our P&L, positive P&L, coming prior to 11 o'clock in the morning. So I'm a big fan of not over trading. Going back to layers of probability, going back to Cameron's question, one of the layers of probability that I discussed in that class is time of day. And I say that time of day between 11 and like 2 o'clock is the lowest probability time of day. So inherently, if you're measuring layers of probability and trying to judge the potential success of the trades that you're taking, if you're putting on a trade between 11 and 2, it's generally going to have a lower probability of success. So the first thing I would say is that I'm a big fan of not over trading. I'm a big fan of knowing what your edge is and exploiting that edge. And there is definitely something to be said about, well, one of the best ways to limit yourself from over trading is just not being in front of the screen. You can't press the button if you're out going for a run because your keyboard's not in front of you. And I get that. I do think that there is some value in some days stepping away from the screen. My preference, though, is for traders to be working towards their trading skills, even if it's not trading directly, as opposed to stepping away from the computer entirely. Again, there may be some value to stepping away from the computer entirely for an hour or something like that, especially if you've hit like a max loss limit for the day and you just need a breather, need a break. I get it. But the problem with fully stepping away from the computer is that anything can happen at any time. And while generally trading midday is not a good idea, that's not true if there's like an event that's happening. As an example, if it's a Fed day, you probably want to be at your computer at 2 o'clock. and you also never know what's going to happen. I think, Dennis, I remember you specifically last Thursday when we had that big afternoon sell-off. I think, correct me if I'm wrong, I think I remember you coming back an hour after the sell-off started or so, or maybe an hour and a half after the sell-off started, and going like, "Oh man, I can't believe I stepped away from my computer and I missed all this opportunity." So that's kind of the flip side. Is you step away from the computer and a geopolitical event happens, then you're all of a sudden missing out on a lot of potential opportunity to be able to make money. So my preference is to be in front of the screens pretty much all day, but to recognize that most days you really shouldn't be doing much actual trading. But that isn't to say that you can't be doing other things that are enhancing your skill set towards trading at that time. Like you said, with journaling and reviewing your trades, or just doing additional research, doing additional reading and learning. I know for myself personally, there is more research and stuff that's out there that I want to read and want to learn than I have time to be able to do during the day. So, you can always be learning more about, like, again, a lot of the stuff that we've been talking about more and more and more and more over the course of the last few years, uh, about market dynamics and things like that's all been part of my learning process. And if anything, I wish I just had more time in the day to spend towards learning and reading and researching that. Like Bill here is saying, I read pretty much all day and then I get interrupted by headlines. So that's really more my preference for what you should do midday. I am also a big believer, honestly, in health and exercise and things like that. I think that if you are a person who takes good care of your health, if you exercise and you get a good night's sleep and you eat right and take your vitamins and all that, that it'll also make you a better trader. But the market's open from 9:30 to 4. If you are diligent and you're here for the morning research and afternoon meeting and everything else, maybe you're in front of the screens from 7 to 5:30. I still think that there's enough time to get your workout in, which is great for your mental health and stress relief and everything else. That will also in turn have a positive impact on your trading. And then something we've also talked about in the past is knowing your mental state every day. I think I'm a believer in getting 8 hours of sleep a night, and I really work towards that genuinely. I don't always, sometimes I'm doing stuff, or I also like to have fun. So I might be out having some drinks with some people, especially if I'm back in New York City or whatever. But I also then I'm cognizant of the fact that next day that I didn't get that good night's sleep that I prefer. But otherwise, it's a balance between living and enjoying your life and being disciplined with the things that are going to create success. Because I think that generally getting a really good night's sleep means that you're going to be more successful at what you do, and honestly, that you'll just kind of be happier generally. So I'm pretty disciplined. Where last night I was in bed, and again I'm on mountain time right now, but I was in bed by 8, and that's with having friends visiting this week. When my friends are not visiting, I'm going to bed between 7 and 7:30 local time. But people visiting has me staying up a little bit past bedtime, and whatever. I think all that's really important. So I think that's kind of the balance. Definitely a believer in not over trading, but if you're stepping away from the screens, you have the potential of missing a really good opportunity when it actually hits. Sometimes those opportunities can be huge. So step away from the screen when you really need to. I think it's okay once in a while, midday, when things seem really slow. But you might end up missing like a really good situation when it pops up once in a while. And I generally prefer to just do more of your research and more of your journaling and everything else midday, and then focus on the workouts and the outdoors and everything else after market hours. Follow up here from Dennis. I'd agree. There's a lot of other things to do during the day besides trading. When I said off-screen rejuvenation, I meant pretty much off market hours, sleep, exercise, nightly routines, etc., periodic vacation, social stuff. Yeah, all that. I agree, 100%. All that is super important. I think vacations are super important too. Life's worth living. I definitely have this issue of continuing to trade even when I'm on vacation, which is just what it is, but it's part of the downside of swing trading and pretty much always having positions on. Awesome. I think I got through everything. I know there were some other comments that popped up in the VTF, but I don't think that there's anything in here that I needed to address directly. So I think we covered it there. Looks like we covered everything in YouTube. It's working towards 5 o'clock Eastern. So let's wrap it up. Have a wonderful night, everybody. PPI tomorrow. See what it does to this market. I'll see you then.